trading here, guys? Are we in rhythm? Do we understand the current rhythm of the market? Have we had enough of a counter rotation? Is there the beginnings of a momentum shift in price? And what I've tried to do here, this is very important. I've tried to label this and put this together in essentially, it's very difficult to do perfectly because sometimes different combinations of different pieces of this will give us something that's worthwhile. But what I've tried to do here is actually create a hierarchy for you. I've actually tried to rank these in order of kind of must-haves for trading well. I also tried to rank some of the subcategories like this. So this is an extremely powerful slide here. It's very, very important. So rhythm, do we have those things? Contextual order flow. Do we have one or more in our favor? Is it fresh? Right? We could have you could say there's a delta neutral in my favor, and that might be true, but it might have happened quite a while ago versus like actually trading a delta neutralization, right? So notice this is a delta neutralization. This is delta neutral being in our favor above or below zero in general. So delta neutral, and then equally in terms of the hierarchy, I have contextual order flow shift, which is more powerful than contextual order flow being in your favor. You see the connection? The fresh one versus the stale one. The fresh one versus the stale one. And then we have our absolute levels. Beautiful stuff. What about short-term order flow? Do we have one or more in our favor? Late rotation capitulation is just a fantastic one, followed by divergence, followed by a strong shift, right? We talked about short-term order flow shifts, really strong one, right? Something like this, right? Where we're pushing down, and then all of a sudden there's a really strong shift, the size of the buying there coming off of that low. We know it's at an extreme with our DVA framework. It's like 3 standard deviations, right? So energy, if you're getting short down here, God bless you, right? That's going to be tough. Rhythm, energy dissipated, even within the DVA framework, confirming that, right? Because you could have a move from up here to down here. That's not the same energy dissipation as one from down here to down here. And then you get a big shift. So anyways, back to the list here. That's a strong shift. A lot of times these are a little bit more quick scalp unless you're pairing it with other things, right? To have a different view. And then absorption, like I said, it's last. Stop runs. Do we have a macro stop run in progress, right? Do we have a macro stop run that has recently been completed? So here's one that would be in progress right here, right? And maybe there's something like this that sets up and you're looking to short there, right? That would be a recent one, a recent macro stop run. What about macro need for one? What about some kind of scalp getting long, knowing that this is a really vulnerable area? There's been stacked kind of swings into this area where you can actually take advantage of the stop run, trading into it, with it, taking profits as other people stop out. That's good trading. Pretty cool. What about a micro one? Typically a micro one, you're going to need to combine it with something else for it to be really worthwhile. But in general, let's say while we're looking at some individual bars, we see a market come up and then, put in a handful of highs or something, and then it makes this beautiful little wick and turn, right, of that little micro within the context of all this other stuff. DVA, is it in our favor? Are we taking an extreme fade, right? What's that? Extreme fade is where, as the market does all these things during a rotational environment, we are getting short from the upper extreme fades, getting long from the lower extreme fades. So essentially, is your trade location relative to the DVA framework in your favor? Am I getting long at the lower extreme or short at the upper extreme for extreme fades? Or is it a imbalance pullback? And both of these terms are NADRO terms that I've brought into the scalping course, which would be, okay, the buyers start to take control, and then we have these imbalance pullbacks where price comes in or around developing value high in the case of an imbalance up, and we're going with those. And then lastly is a continuation play. Something happened. I'll change the color of the drawing. Something happened where we got an extreme fade. We didn't trade it, or we already traded it, or whatever. And it was significant, and all these things, came into play, and there was a trade, and it moved away from there. But maybe we weren't even ready yet. Maybe we hadn't sat down at the screens. Maybe, blah, blah, blah. And then we get an opportunity like this or like this on these pullbacks. Those are continuation plays as a DVA concept of value traversal plays out. We didn't get the ideal spot for it. We weren't at the desk. But now it's kind of continuation plays, and these are last on the list. But they're still viable. Price action, patterns, momentum. Stop runs kind of covered a lot of this, actually, right? So, if we were going to come in here and talk about a spring pattern, right? Well, that's a form of a stop run. So I'm just saying it's a little duplicative in terms of some of the stop run stuff in terms of patterns. Clean price action, right? Remember, is the market moving like this, or is the market moving like this? If not, we usually revert to needing a stop run or the market to open up. So right here might be that stop run as I drew this. If this thing reverts real quickly back into there, maybe there's an order flow signal, things like that. If it was too messy to trade, that doesn't mean that there's not any stops in here, as we attempted something before we recognized. You don't just recognize messy until it's messy. So a lot of times that means a losing trade or two, and then you have to come off the gas, right? And what I'm saying is you need to wait for cleaner price action, things opening up in that regard, or some kind of stop run to trigger you in from, what's the concept? From outside, right? Outside. This is outside the chop. And then we have general things like flaggy, outside, to use price action and patterns and momentum to find entries. I love trading flags. I love it. I don't always trade from outside, but it's a really good concept. It's last on the list there, but it's a really good concept. Is context, something contextual, in your favor? That's different than contextual order flow. The way that I'm describing it here, when I put this number 7 category in here, it's actual higher time frame context, something like that. It could be NADRO related, it could be something else. Um, is context in your favor? And then we differentiate, is it from an actual trade location? Again, if applicable, right? Let's say context has a bull zone like my DMIs or something, right? From NADRO based stuff. Well, are you finding a scalp trade long from this region here or something? Or has it left that region and now we're trying to find a scalp trade here or here? You might be aligned with, let's say, hypo 1 or something for your trading for that day if you use context. Um, and so there's the question there. If you're using context and you're really a scalper, it's going way down the list. It's hugely different. In NADRO, if you don't have context, you don't have a trade idea. In scalping, context, we're introducing it as something that you can have, but it's way down the list. Remember, this is a hierarchy. It's not perfect, but it's the hierarchy I'm giving you. It's what the best thing that I could come up with in my brain to give you it in a simple and straightforward way. And then we have speed and energy. And there is, kind of a overall energy, or is it the night of and the day after or whatever the election, or is it more of that's the overall energy dynamic, or is it more of a recent or immediate speed? That's really important, right? When it comes to the timing component we talked about. A lot of times for entries, it's really good to see a recent kind of immediate speed. Recent is like something changed in the overall energy recently. Immediate speed is kind of a speed of tape or energy to a move as it happens in one bar. And a lot of the best energy, a lot of the best trade entries, a lot of them, not all of them, they have that, right? Like I'm sure this had that. And then the what didn't happen. It could be useful for framing us coming into the point of finding a good entry. We talked a little bit about what didn't happen slightly right there. There's an element of what didn't happen in this region, which was the imbalance down couldn't continue. So DVA, as we mentioned on that slide, gives us an additional what didn't happen. And we covered what didn't happen from a price perspective and stuff the other day as well. Yeah, Mike, we covered this at in detail the other day. Definitely go back and watch the recording. But we kind of talked about if a market, especially a rotational one, um, or even just recent swings, just a handful of swings, if you're making decisions inside of where some of these recent rotations have been, if you're making a trade decision in this region, right, it's a lot of times a not as good decision. What would be better is if this market could give you some type of trade location outside this region of recent swing highs and swing lows range, right? Finding the trades outside. Well, this one's not fair because we don't have the range established yet, so I shouldn't do that. So really, a couple of them here outside. It coincides with stop runs, things like that. And it's not value based, Mike. Mike's a NADRO student, an AGM student. Mike understands, a lot of this stuff really, really well, but it's not value based. It's rotation based. We're in a very short term world here. So we can go look at some charts. We can, try to put a lot of this together. We've already kind of been doing so with this guy here. Um, in general, um, what I'm doing here is giving you guys the frameworks. And I'm giving you a hierarchy. I'm giving you an order of importance for each category and whatnot. And it's just really super powerful stuff here. We could go back to yesterday, the sequence into the low. It's at a real, obviously the rhythm is there. Obviously, what else? What else could we say about this? We have the short-term, huge short-term order flow signal that we talked about. Remember that little flag on the session yesterday from this region? The expectation is for some form of a reversion, at least up to test developing value as this market's trying to get imbalanced down. So DVA is not in our favor, but it is an extreme fade. If we're getting long from the lower extreme, which this absolutely is, it's a real extreme, then it's in our favor. I'm not aware of a stop run, at least nothing recent, right, for that. It's certainly outside in terms of range, right? Here was the overnight low and there was the previous low as this thing broke down. So that's certainly in our favor in terms of price action being outside. It's certainly clean price action. There was certainly higher energy, so we can get away with more on taking a small. This wouldn't meet short-term. If it depends on how you read the rhythm here, and this is a great example. If you're saying this is the rhythm down, which we are, then any kind of turn off this region, it makes sense. But in reality, there's a little bit more short-term rhythm we could look at, right? This, and then this, which we were doing. We were saying this is a little flag. This is a down move that doesn't have much selling behind it. So if there's a momentum shift coming off of that right here, that's good timing. So what would we attribute? We have good rhythm. There's a little complication there because of the micro versus the bigger rhythm, but this was very outsized. A lot of these more normal moves are much smaller, so this fits the bill. Contextual order flow, it's not yet a shift. It's in negative territory. It's not a delta neutral, none of those things. We do get a decent shift of buying. We were kind of looking at this capitulatory type movement that we saw, especially right here. And then there was a stall. And then that last gasp is what I called it, I believe, at that time. And then the buyers took over. They showed us that there was a shift, right? So we did have that. We did have a really nice divergence. I'm not going to call it a late rotation capitulation because it didn't happen immediately around our entry. If our entry would have been where this guy happened here, then I would say that that's in the favor. It's not really a stop run. I wouldn't say that. We do have DVA extreme fade. We do have really nice clean price action, and we do end up with an outside play in terms of where we're at. And there was really nice recent energy. I'm not going to call it overall energy in that market, but really nice. Like this, the energy of this move, if you recall, was different than the rest of the day had been, right? So you put together a handful of things, guys, and you end up with a decent trade. You can each take this collection of frameworks and tools, and you can come up with ways that there's a lot of different ways you could do it. You could pick some favorites. You could, as we're going to talk about later, start to build a playbook of very specific combinations of these things. You could name it. You could name it. You could say, this is my, we're going to call it the three-peat trade, right? And it could have those certain variables, and you put those together into playbook form. And why did I say three? Because it's like 3 standard deviations, right? It's a real extreme. It is high energy. We get a real strong order flow divergence, preferably after some form of capitulation, right? You put these things together and you come up with a trade and you can name it. Or other people might take the approach of, if I'm going to take a trade, I'm going to come up with a checklist. Um, I need to have rhythm is a non negotiable, has to be in my favor.